This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the MAYFAIR Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby PECK Foundation for Children's Education and the CROHN'S and COLITIS Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Tuesday, another day. Today you have the futures a little bit lower, about 10, 11 handles in the SPX. Basically, following Europe's lead lower. Europe's had a big rally over the course of the past week, and then they had some disappointing data out of Germany. So let's just take a quick look at the HEDJ to see, kind of where we're at. We talked about the low in August right here. You had your little double bottom. You had your engulfing day that Friday and a gap that basically didn't get filled, showing some power. But look where we are. I guess this did not have enough power to push through, kind of like our market. So the question is, does it come back in and hold, or does it, shake the tree a little bit? So at this point, I would say this has to hold in order for this to continue, and that's a little bit closer to about 56.26. That's if it sees it. As far as Asia is concerned, Asia just had a huge 2-week rally. The Nikkei is off a little bit. The Shanghai is, I think, flat. Nothing to get into there. As far as our markets, we had 2 really tight days. I call them, they're called actually narrow range bars. So on Twitter, I talked about the NRB7, which means that you have a very tight bar, and typically you can't stay that tight, so sometimes it gets expanded. The question is which way. And oil, which was a little bit more potent to the downside, gave some clues that maybe we could be in for a little bit of a shaking of the tree. So the question is, how much do they shake? So let's see. Let's take a look here at the SPX. You do have your low from August 24th, and then look at that, a retest that everybody was talking about. Little red dog reversal right here. Another red dog reversal on the jobs number when it was weaker than expected, that showed power when we cleared this pivot. So let's get back to where we were. We were looking at this spot last week, which we broke above, and then things got very tight. So with today's in focus, we want to see, do the sellers have any power? So this is what you want to write down. You want to write 2007. See if they could bring it below this 2-day range, and if so, I think psychologically, we need to hold this little 1995-ish area where the the moving averages collide in order to keep this upward momentum. If we don't, it doesn't mean game over. It just means that this pent-up move to the upside, or this pain type trade, could loosen up a little bit, and then the key level would be a little bit closer to this 1970 where we held a lot last week. So support 1, okay, which we'll see if we could either get below and stay below, if so, support 2, support 3. And then if we happen to go green today, okay, which would be pretty impressive, if we start taking out this 2018, the 200-day comes in at 2030, and then where, remember this inside range that we talked about, then basically where we broke down from, which is a little bit closer to this zone. So support 1, 2, and 3 as we approach today, and you could basically line those up with the spiders. I'm not going to get into that. Oil did, have a little bit more than just a controlled pullback yesterday. You look at the USO, and definitely a bit wider than you would have thought. So that could have got you out of some of those names, or or out of that trade. You had the small ascending channel that broke to the downside below yesterday's low. Okay, there is a chance that it comes in and is fine, because remember that 1520 we were talking about. But if it gets below this 1520 and gets much below it, you're going to talk. Everyone's going to be talking about a bit of a breakout failure, and then it's right back into this range. okay, which, we weren't expecting huge things out of oil, but, it's better when oil is kind of grinding higher. It helps with the emerging markets. But anyway, you did get this kind of like wide range bar down to engulf these 3 days, so watch this pivot. 1520 is that pivot. As far as the oil stocks, I think people wanted them to go down. We talked about some cute shorts the past day or so last week where we did catch a few little surgical moves. The question is, though, in this down move, do they hold higher to give clues that they could actually continue later into this year, or do they fall apart and was that your just dash for trash and squeeze? So what you got to do is you got to take the XLE, which had a big move. First of all, look where the XLEs have come from. You're talking about a huge move from this, head and shoulders top right here. This was north of 100, lost a 200-day right there. So all you saw right now is basically a move back to, a prior support, which turns into resistance. That was, one of the spots why I put that as a potential target. So the question is, what now? So if you look here, you'll see that if you did, catch your short, I would cover a little bit into this spot. If the XLEs do hold this spot right here, which is, I believe, like, what is that, 60, 67.50-ish, that would be pretty impressive. All you know right here is yesterday's low is a pivot. So yesterday's low is a 67.43. This is 66. So below that, on the third down day, if you're looking to buy a dip, this would be a spot to watch, and maybe even get a red dog reversal around that pivot. If this doesn't hold, I would think that this area, if this group is any good, it should hold north of 65.50. Okay, it shouldn't go much below that. Otherwise, people are going to be like, it was just a rally like this that failed, et cetera, et cetera. But this one, I think, could have a tiny bit more legs. If you want to look at some names, we've been talking about CVX that broke above its pivot right here. Remember that. This is when the markets came in and tested the lows. It did not. It held higher, giving some clues that it was ready. You now have this upper flag. They didn't give you much to the short side. See what happens today if it breaks below this little spot. So right down 87.87. If that were to hold and go sideways, that would be pretty impressive stand by the bulls. I personally think that, it would be nice to see this. Okay, you see that, and potentially that would be a spot to look. It's a little bit more compelling. And then obviously the 21 days well below. So, on this same type of scenario, you have support 1 to see if it holds yesterday's low, and then support 2. And then really, if this is any good, you would think that it really doesn't get, oops, sorry, hold on one second. You would think that it doesn't really get, I don't know, below this. Why can't I get my little pencil? Okay, here you go. Below this spot, going across. Okay, you don't want to see it get back much more than that. And that would also, by this point, everyone will be so negative anyway. So support 1, support 2, support 3. As far as things to look out for today, yesterday, high beta tech was pretty strong, right? You had Google close at highs, Amazon close at highs. Today, we'll see if any money comes back to them. You go to Google, this has been one of the most constructive charts out there, which I've talked many times. You just had a nice flag pattern where it held support. So now the question is, can it get above this and show some leadership? So, this is on my radar. If it can clear this 680, maybe there's a pre-earnings move, because earnings doesn't come out for a while, back towards 700. You go to the same thing with Amazon. Amazon closed at the highs. I know the volume wasn't great, but basically, it was a holiday yesterday. It wasn't great anywhere. So with that being said, let's see if Amazon could give you a push to green above yesterday's high of 551, and then maybe it makes its way back towards high. So at this point, both of these stocks have the best setups, and I know it gets a little harder when you have these base on base moves, because at some point, it might not hold steady, but at this point the trend has been to the upside, and this looks best in breed still, and you still have a week and a half for them to do whatever they want before earnings. Netflix does come out on Wednesday, so that'll give us some clues on how these things get treated, because they're pretty priced for perfection. If this has a blockbuster report, maybe it takes out this little spot here and gets back towards highs, but if there's any signs of weakness, you got to be careful. So I'm not going to have any Netflix going into the report. I'm just going to trade it after with pivots, and who knows, maybe today's only Tuesday. They give you a quick little trade above 116 prior. If not, just kind of avoid it. So we'll see what happens there with Netflix. As far as Apple's concerned, it's done nothing special at all. It's lagged the market the last 2 weeks. There's been small little micro trades, but nothing to write home about. We haven't been really focusing on it. It's good kind of to know what it's doing, but not something that's going to be paying your bills right now, especially for movement. So here's like key support right there, which is still around 107.5. Couldn't hold yesterday's gain. So I guess, who knows? Maybe, it's down 60 cents. It goes from red to green for a trade. But that's about it. I wouldn't over-focus on this. It's still below the 200-day, and I'm not even going to get into the daily patterns until a little bit later. Some guys wanted me to take a quick look at the airlines because they've been kind of stronger, and if oil, does continue to get weaker, maybe it's a place to have some momentum. Delta looks like one of the best charts out there. It's already had 2 big days. It's coming out with earnings soon, so see how it gets treated after earnings. It did clear this spot. Your next spot comes all the way up here. JetBlue was downgraded today. That one also technically looked the best, so I guess see how it deals with the downgrade. It's down probably 60, 70 cents. Needs to hold this spot, otherwise this would lose momentum. If it holds actually here, chances are, people don't agree with the downgrade, and it could be one of the names like a Delta to make new highs. And then you have, what is it, XLK? Is that Alaska Airline? No, that's the ETF for technology. All right, what else? Oh, see, listen, I don't have a teleprompter here, so it's all off the top of my head. I know, what else do we have out there? UAL, okay, this one is a laggard, I know that, but it's coming off the lows. Reclaimed some moving averages, so with a little bit more time, maybe if this group, gets back in a little bit more stride and oil doesn't continue to go, there's a little descending channel right there, but it just popped up a few days. So those are the airlines. I don't typically trade them. I just gave you a look at them. As far as other sectors, I would keep your eye on the bios. The bios have been somewhat weaker. They haven't really participated in the bounce. You look at the IBBs, you have this trend that got broken way back when here. Okay, and remember this head and shoulders top there, and then the ascending channel that broke there, and now you basically have like another wedge type pattern here. So the question is, does this resolve to the downside to give the bears some fuel and talk about a retest of here, or does it play a little upside catch-up? So take a closer look here, and you'll see that you do have this small rising channel that if this were to break, again, you got to be a little bit careful. If it wants to continue to trickle up, you have that resistance that came in right there, a little bit closer to 320. So we shall see. Also use maybe CELG as a barometer. CELG is inching its way up, but hasn't had any power. So maybe if CELG were to break this descending channel, maybe that would lift the bios. Some smaller bios have been moving better, but I don't know if you could chase it now. You have JUNO, gave you a methodical move that some guys were looking for. That happened right here. This was a nice little break of this wedge. Here was your nice bull flag that gave you some continuation yesterday. Maybe see if something like that happens in KITE. But again, they don't always all trade together, but KITE gave you a decent move off the lows. So now I would say if KITE could hold above these little moving averages right here, okay, just say above, what was that, 60-ish, maybe there's a spot for it to clear above 65 to the upside. Today after the close, we see JP Morgan. A lot of people are talking about credit quality, loan reserves, this and that. We'll just see how the market treats it after the close. So at this point, the banks haven't been doing anything special, but if the market wants to continue to have a bid, these things can't fall apart. And if you look closer here, I guess, levels-wise, this would be important support going across, to hold. You want to see JP Morgan after the report hold this 61.22. And I guess if it's, the bar set so low and it does okay, maybe there's a trade here above 63.50, and then if it starts taking back, this area, that would probably, put a decent bid in the market. Just to show you the XLF, not really doing much special here. It is tight. It's been out of play. Again, the market's not expecting much. This will be key support moving forward. The XLF has to hold this 22.84, and if I guess the market likes what it sees from JP Morgan and some of the other banks this week, this would be resistance to get above, but then wall of moving averages in front of it. So I wouldn't expect too much here, nothing too blockbustery. Some guys got very excited about gold, and yesterday we talked about trimming the GLDs into 112 because first time you get to the 200-day or bigger resistance is a better sell than a buy, especially after the move. It did fail, and the metals are lower this morning. So now I would say you got to have the GLDs need to hold, I would say somewhere around here if it wants another attempt to try and take out this 200-day there. So this was a better sell than a buy yesterday. Now it's down a little bit. So here is your your support zone that probably needs to hold for some traders to continue to look at it. This low here is 110.23. This moving average is like 1950. So this would be your zone that if you did buy it on this gap and you sold some into strength, maybe look to buy it back somewhere in here, you know, or at least see if this holds to give some clues that there might be a little bit better action, you know, in the metals besides just failing at the 200-day, which it's, you know, been pretty much doing for almost a year or two. So with all that said, futures are a little bit lower. Europe's a bit off the lows. High beta tech was stronger yesterday. We'll see if some money comes back there. Oil was down a little bit more than just a controlled pullback, so you know that 15.20 in the USO or 47 for oil. Banks come out after the close, so we'll see what happens as far as JP Morgan's concerned. We know that the S&P, 2 really narrow days. I would look to see, you know, in the spiders need to hold this little spot right here to judge. Look how tight the spiders were right here. This is actually 200-58, so a close below that probably gets you at least a move down to this spot. So support 1, support 2. If we do hold this, pretty impressive. Then you have the 200-day above. You know, and again, this move has been pretty methodical, and the sellers will have their chance today. Can they get the spiders below this 291, or even just say 258 and keep it below? If they can't, then a lot of the shorts have been rolling them up, will probably remain trapped, and then everybody's going to have to remain on their toes to be buyers. But then again, lots of resistance overhead. So follow me on the virtual trade floor. If you happen to be on there, you'll see me take off positions, put on positions, see things real time. I try and do it on Twitter from time to time, but sometimes I don't have enough thumbs because things are moving around that fast. I'm also on the radio, and there's lots of ways, lots of resources for you out there. Hopefully you use them, and if so, you know what? That's half the battle. I'll see you at the recap today. Have a great day trading.